Hello, and welcome to Markets in Focus. My name is Joe Bell, and today I'm going to walk you through some of the most interesting financial market themes that I'm observing. So, a lot of positive momentum in equity markets with the S&P 500 rallying as the US-Iran conflict continues to de-escalate. Market breadth, which is the participation, is generally improving alongside prices. And finally, when we look at the bond markets, we've seen heavy issuance in the high yield space and spreads continue to narrow, meaning credit investors are seeing risk appetite in that area. Stocks lead the way as US-Iran conflict de-escalates. The S&P 500 has risen 12.1% since its March 30 bottom. If you go back and look since 1929, that is a 17 trading day period. If you look back at all rolling 17-day trading periods since 1929, January of 29, that is in the top 1% of all returns during that time period. So we are certainly in rare territory, and there has certainly been a surge in demand. Who is leading the way? Somehow it dwarfs that data point on the chart to the right. The S&P 500 Philly Semiconductor Index, representing the semiconductor industry, is up more than 40%. You don't have to look very far. If you looked on Friday morning, you saw a huge pop by Intel. That's been on a big rally the entirety of this year and driven by a surge in AI demand, a surge in semiconductor chip demand. Semiconductors are certainly leading the way, a lot of it related to the de-escalation of the US-Iran conflict. Now, even though leadership is concentrated at the top, we are actually seeing a lot of stocks participate on this risk on rally. Take a look at the NYSE stocks only cumulative advanced decline line in the dark blue, and in the teal, the NYSE Composite Price Index. And you can see the blue line had made a new all-time high. That calculates the running tally of advancing issues minus declining issues. And when that is advancing, leading, and confirming the price index performance that we've seen from several different indices, from S&P 500 to S&P 400 Mid Cap Index, Russell 2000, and the NYSE Composite Index. This market breadth line at a new all-time high confirms that we're seeing a broad participation and a lot of different stocks rallying, even though the semiconductor percentage gains are so high. Now, when you look at credit markets, we are seeing bond yields staying relatively elevated compared to the sharp rally that we've seen in stocks. But when you look at high yields, we are seeing credit spreads compress as the primary market surges. And a couple data points I want to point you to: the ICE Bank of America US high yield option adjusted spread. You can see it narrowed from a near-term peak of 346 basis points down to currently 284 basis points. A couple notes on this. We are, number one, at the peak, we did not see spreads widen out to as far as they have done in 2022, the great financial crisis, other prolonged credit stress events. We've also seen them begin to narrow. In April specifically, we've had nearly $30 billion in new high yield issued, a lot of it related to data centers across the US. That is the highest since September, and it's the highest highest month of April since 2021. So big issuance. Overall, credit investors are not sounding alarms around this conflict. And that's a good thing just from a risk appetite perspective, that the bond market is still taking risk in this area. And we're seeing a lot of primary activity. They are not overly concerned that's causing a dry up in issuance. Now, finally, everybody knows that there's a midterm election coming up this fall, and AI is developing at a rapid pace. But both of those things are coming at the same time. We've already seen candidates start to utilize AI, deepfake AI, to create videos of their opponents doing things that the opponents have never done because it's a fake AI generated. And they just put a little disclaimer at the bottom. Governments are obviously going to be racing to regulate and figure out what is allowed, what is not allowed. Right now, you have a lot of candidates starting to use that already. This will be another item to put on the list of how are we going to deal with this over the next 3, 4 years as it becomes even more difficult to decipher between a fake AI on a video versus an actual person doing something. And that will be an interesting thing to look at and observe throughout these midterm elections this cycle and over the next decade. With that, I want to thank everyone for watching, and I'll see you next time.